Does GCash trade well enough to reopen the pipeline? To answer that honestly, you cannot just look at GCash. You have to look at what happened to the last batch of regional champions. The base rate for this region is brutal. If you bought Southeast Asia tech IPO story over the last 8 years, with one exception really, you lost money. Here's a number that should stop you cold. Since 2017, Southeast Asia has produced exactly one tech IPO that made public investors real money. One out of every name you can picture. And this week, the Philippines is getting ready to bet its entire year on the next. So today we talk about who is buying, who is selling, and which side of that trade you actually want to be standing on. Welcome back to Sea of Startups, real, raw, relatable. I'm Kevin Brocklin. I write checks into early stage companies across this region with Indelible Ventures, and this show is where we take the week's Southeast Asian startup news the way it actually is, not the way the press release dressed it up. 4 stories this week, and they braid into one. We open with good news because there generally is some. And then we follow the money all the way to the part nobody puts on the deck. So let's get into it. The first part that we're going to talk about is how the smart money just showed up twice in 1 week. We start with the hopeful here because it's real and it's specific. So this week, 2 of the most serious institutions on the planet made their first proper bet on Southeast Asia. Not a press tour, not a memorandum of understanding, actual money into actual companies. The first, MIT. The university joined the cap table of a Singapore company called PVX Partners. Not a flashy company. Never heard of them personally before this. They do cohort-based financing for user acquisition. Basically, they fund the marketing spend for mobile games and consumer apps and get paid back out of the revenue those users generate. It came on the back of a fundraising earlier of $10+ million with names like General Catalyst, and I think there was a DraftKings vehicle in there too. And this is MIT's first major disclosed startup bet in this region, at least that I was able to find. I couldn't find anything when I was searching around for it. And the second, and this one landed just the other day before I'm recording this, is Pfizer Ventures, the drug giant's venture arm, made its first Southeast Asia startup investment into a Singapore biotech company called Engine Biosciences. Engine does AI-driven precision oncology, finding cancer drugs with machine learning and and they just opened a Silicon Valley office to go with the Singapore base. Now, here's why I'm not just reading you a funding roundup. When an elite American endowment and Big Pharma's investment arm both pick Singapore companies for their opening move in the same week, it's not a coincidence. That is a signal about where patient, sophisticated capital now thinks the edge is. These are not tourists chasing a hot round. PVX, if that's how you pronounce it, is unglamorous infrastructure. Engine is deep science. Both are the kind of bet you make when you have done the work to stay. At least that's the way that I read it. So that's the good news. Smart money is arriving. But hold that thought because the rest of the episode is about what happens to the money that was already here when it tries to leave. So this is where we start transitioning to talk about the Philippines bet. You started a company to build a product, not to run a back office. But here you are. You pay an accounting firm every month, and once a year, you get a clean set of accounts. That is compliance. It's not clarity. It will not tell you if you run out of cash in March. It will not tell you what one new hire does to your runway. And it will not answer the question every investor asks: where's this business heading? So I built your CFO, your back office in a box. Your books keeps your accounting books current, and your CFO puts your forecast forward. In one login, your actuals flowing straight into your outlook. Link your strategic initiatives, like a hire or a price change, to exactly what it does to your runway before you commit. Investor ready, operationally ready, in the currency that you work in. It is the back office I run across my own companies. Get your finances settled for your business today at yourcfo.tech. That's yourcfo.tech. Tech. So on the 27th, Mint, the company behind GCash, filed its registration with the Philippine Securities and Exchange Commission and its listing application with the stock exchange. The numbers, up to 92.3 billion pesos, which is 1.5 billion US dollars, at up to 10 pesos a share, targeting a fourth quarter debut. If it prices at the top, it is the largest IPO in Philippine history. Sit with the context for a second. The Philippines IPO count for 2026 before this filing was zero, nothing. So the country's first listing of the year is also the biggest it has ever had. And it's a fintech, which, if you listen to the show before, is, my home turf bias made concrete. GCash put financial services into something like 90 million pockets. It is the rare regional company that is genuinely profitable. And the pitch writes itself. The people who made GCash a habit now can potentially own a piece of it. Um, I want this to work. Let me say that plainly. But now I need to say the part that worries me out loud, because that's the point of doing these episodes, is to say the quiet part out loud. The float of this company is about 12%. 12% of the shares are going to end up going into the public market. That means the public is being sold a fairly thin slice while insiders keep the rest. And to fit GCash into its main index, the exchange is now considering cutting its own minimum public float rule from 20 down to as low as 12. Take that in. The benchmark is bending its own rules to accommodate one company. Now, when a market reshapes itself around a single listing, and that single listing is carrying the whole nation's IPO year on its back, that's not really a recovery. That is concentration risk wearing a party hat. The real question for the episode is this: does GCash trade well enough to reopen the pipeline for tonic for everyone waiting behind it, or does one wobble set the Philippine market back another 2 years? To answer that honestly, you cannot just look at GCash. You have to look at what happened to the last batch of regional champions that rang the bell in their own respective markets, which brings me to the risk overhanging the markets next door. Uh, this is where, Indonesia is essentially getting a stay of execution, not a clean bill of health, but a stay of execution, because while Manila is opening a door, Jakarta is trying to keep one from closing. Now, on the 24th and 25th of this month of June, the MSCI, the index provider whose decisions quietly move billions in passive money, deferred its decision on whether to downgrade Indonesia from emerging market status to frontier. They kicked it to November. Indonesia keeps the emerging badge for now. Why was it even on the table? Well, the MSCI said, in effect, that it cannot trust the Indonesian market. I know, lots of getting beat up every which direction. Lack of transparency in who actually owns the shares. Suspected coordinated trading that makes it hard to know what a fair price even is, or how much stock is genuinely free to trade. And the market rallied on, and so there is relief all around. Now, here's where I get off the celebratory bus. That rally is celebrating a delay, not a fix. When the index provider tells you it cannot work out who owns the shares or what they're really worth, that doesn't seem like a paperwork problem. That is a governance warning about the entire market. And look at how Indonesia is responding. It is leaning on Danantara, the sovereign fund, plus insurers and pension funds to add the buying support and prop up the exchange. Think about what that means. To pass a test about transparency and genuine free float, the answer is to bring in state and pension money to hold the market up. That is honestly kind of the opposite of the thing they are being asked to prove. So a frontier downgrade is not abstract. It would force passive funds to sell Indonesian equities mechanically, which raises the cost of capital for every late stage founder in the country who is dreaming about an IPO on that market, especially now without the hype cycle. So November is closer than it sounds in order to get there. So Manila might be opening up, maybe, question mark. Jakarta, one review away from being pushed out. Hope on one side, risk on the other. Now, let's put a few numbers on which way that bet usually goes. Here's where I talk about 1C, 6 shipwrecks. I promised you a number at the top, and here it is with the receipts. So since 2017, here's how Southeast Asia's big tech IPOs have actually treated the public investors who bought in. So SIA, listed on the NYSE back in 2017, they raised $884 million. At the time of the IPO, their $4.9 billion. Significant increase over capital raised. On the surface, fantastic. This is the 1C6 shipwreck. So they are actually up from their listing price. They're actually, trading somewhere in the 50 somewhere in the 50 billion range. So that's up. That's the one winner. But then you compare that to a Grab, for example, which was Malaysia born, but with a Singapore HQ, listed in NASDAQ via SPAC back in 2021. They actually raised a lot of money, 4.5 billion of capital raised. And when they went to the market, their market cap was nearly $40 billion. But fast forward to what they're trading at now, and you find them just a quarter of that, 15 billion, down, what is that, 60% from that listing. To a similar company in the ride-hailing space, GoTo over in Indonesia, that listed on the local exchange in Indonesia. They raised a lot of money as well. They raised over $1 billion. Market cap at that time was 28, but they've crashed down to roughly 3 billion, I believe is what they're. And if you look at, just to continue the other ones here, Bukalapak Also listed in Indonesia around the same time period, raised 1.5 billion, listed I think it's 6 billion of market cap and are trading at a fraction of that. I think they're at 500 million, 500 million, not even at the value of the capital that they raised. Blibli, also in Indonesia, around the same time period, raised 500 million, listed at 3.4, currently somewhere around 2 billion. I mean, their backer kind of cushions them, so they're probably only going to fall so far. If you look at Property Guru, they raised, they listed in the NYSE as well, via SPAC. They raised 350 plus million. When IPO just shy of the 2 bill mark, and ended up going through a take private at like 1 plus, down significantly from their listing. So there you go. You just end up seeing a collapse across the board. So then the rest of the fleet, you look across at them, they're just really falling out. So here is the thing where I need to say the caveats out loud because the show runs on honest data. The SPAC valuations, those were listing, those were announced deal valuations, not day one closes. Both fell on the open. So the number that I throw out there it needs to be caveated. You look at currency, we can look at them dollar terms on what it stands at today. We have weak currencies in both Indonesia and Philippines, so that's obviously going to end up affecting theirs. You know, SIA's multiple market cap up is up, but the per share return is about 6x because of share issuances. Safest line on, it is roughly somewhere around there. So like, here's the honest read. I throw out some numbers of what's going on with these, but the base rate for this region is brutal. If you bought Southeast Asia tech IPO story over the last 8 years, with one exception really, you lost money. But, and this matters, almost every one of those shipwrecks went public, unprofitable, floated at the very top of the cheap money window on a growth at all cost story. GCash is not that. GCash actually makes money. That is the one thing that could break the curse. The curse was never the business. The risk is the entry price. GCash is reportedly chasing a valuation of around $8 to $9 billion against a 5 billion private just a couple of years ago. That is the exact same premium to the last round framing that came right before every name on my shipwreck list. History says it is not company quality that determines whether public investors win. It is the price on the day they're let in. The buy low, sell high. So if mint prices for perfection at the top of that range, the regional base rate says the valuation compresses toward fundamentals first and compounds later. If you're patient, your own converge down 40% is the cautionary tale in your own back. So here's the thread that ties this whole week together. This was the week Southeast Asia's public markets stopped pretending to be a pure growth story and started behaving like state-managed plumbing. A fintech bends and exchanges rules to get listed. A country leans on its sovereign fund to keep its emerging market badge. And underneath all of it, the smartest new money in the world, Pfizer, is quietly buying into private companies at the early stage, not so early, but still early, where the value actually gets made, long before any of this public market theater begins. Notice where the sophisticated capital is putting its chips. Not into the IPO, into the cap table years earlier. So my filter for all of it, and yours, should be the same question. Who actually holds the pen here? Who decides what gets built, what gets listed, what gets propped up, more and more in this region, the answer is governments and sovereign funds, not founders and not public investors. If you're a founder who isn't a conglomerate heir or a sovereign fund favorite, that should tell you exactly where to aim and exactly who to raise from. That's the week. If this was useful, the most useful thing you can do is send it to one founder who's about to get excited about an IPO. I'm Kevin
You started
Brockman,
a company to
real,
build a
raw,
product.
relatable. I'll see you next week.
And that does it for this episode of Sea of Startups. If you've enjoyed what you've been listening to, please give it a like, give it a review, subscribe to our channel. A little bit of feedback goes a long way in allowing us to keep on putting out these kind of episodes.